Hey guys, Marc from MAK Capital here, giving you an update on this week when winter is here. But I want to talk about a few things on. Let's talk about 2022 a little bit, and a big thing I know a lot of you are probably thinking about are taxes. And so taxes, we want to talk about kind of getting towards the end of the year, most people's fiscal year, and one thing I wanted to talk about. The second thing I want to talk about is just people ask me how to invest. What's the different ways that you can get invested into a project? And then also at the end, I want to talk about some new markets that we're looking at for 2022, and maybe, you know, where are people trending? Where's the population growth? Where's the new hot place to invest? So we'll talk about those at the end here. So anyway, let's talk about taxes a little bit and how these multifamily projects and mixed-use projects help us in our taxes, and honestly, it's the main reason we invest in real estate. You wouldn't think so, but for most people, taxes is a huge reason why they invest in real estate, and it's not even if they make cash flow, just for the tax reasons alone. So why do they do that? Cost segregation, I guess, would be how they're getting this. So you're basically, cost segregation is, say it's a $10 million asset. Well, the electrical, the plumbing, the lights, the content, the wood, everything, the drywall work, everything is actually front-loaded into as a, let's say, just a depreciation. So in the first 5 years, you actually can push a lot of the expenses of the building, not the land, because you can't depreciate land. Again, farmland's always tough because land is not depreciable. But in multifamily, you have all these materials that can be depreciated quicker. And so you perform a cost segregation study. It's kind of like where an engineering firm would come in and study the building and what the materials are made out of, and come up with a depreciation amount that's front-loaded. So in these big buildings, we can depreciate, get a lot more tax benefits than we are necessarily getting. We're getting cash flow from it, right, monthly, but with the front-loaded depreciation and the cost segregation study, you actually get a loss every month, or at the end of the year. So it'll, no matter how much cash flow, if you made 10 grand, you actually could get a K1 slip that says you lost 14 grand. And again, just because you're front-loading the depreciation on the building, so it's a tax write-off, right? Write-offs are key. So. So anyway, just kind of want to explain a little bit why we're doing these, what cost segregation study is, and how it helps you in your taxes and in these real estate things. This is a huge, huge topic in the part of real estate. So if you don't know about that, ask me more about that. I'd love to tell you more. So let's go on to the second thing. So ways to invest in our projects, kind of get that asked a lot. So I wanted to bring that up and just say, okay, well, obviously cash, we can take cash and just put you in the project as an equity position. You also can come through from a 1031 exchange. So maybe you own a building now, maybe a fourplex or something. And you're like, Marc, I want to sell this, and I need to move the capital so I don't get taxed on the gains, and I need to move it into a project. Okay, we can do that as long as we have a project that's in line, needing funding, right? Because you need to, when you do a 1031, you have a window of opportunity, 60, 90 days, where you have to find the place where you need to source the funds. So again, we can help with that. You can ask me if there's any properties that I have or looking at that may be an opportunity for you. So 1031 exchange, and then also a self-directed IRA. So it's actually like a 401k where you can direct where the funds go and how you're getting cash flow from. Or how you're getting, where you're directing where your cash can go within the investment. So you can actually take your self-directed money and actually place it into this, fund or equity position into a real estate, and that would be your investment. So I think a lot of times self-directed IRAs are just like based in the stock market. But if you don't feel secure with the stock market, like most of us don't really feel today, because I think we're going a downward trend now. It's been a euphoric time of up, and whatever must go up must come down in the stock market. So anywho, so self-directed IRA, you can actually push your funds right into a real estate project. So cash, 1031 exchange, self-directed IRAs. There's other ways as well. If you're a subcontractor of ours, you can get in it through just a contribution of your subcontract agreement, but that's only worked for some. So let's talk some new markets. All right, so new markets is kind of a hot topic that everyone wants to be in the new up and coming market. I don't think that this is a surprise that it seems like these areas of the U.S. are just getting flooded. North Dakota, even Fargo, all these places are populating more and more. So areas that I'm going to be looking for projects, and I want your feedback on this. If you have a specific area you would like to place money, I always get the Florida, the Arizona, the Texas, very competitive markets right now. Very hard to find anything there that's worth buying unless you want to super overpay and hope for appreciation, because these cap rates are down in the 3s, 2.5%. It's crazy. So Boise, Idaho Falls, those are some other ones that we're looking at. Very expensive as well. So it's as far as a new markets, we've looked at Sioux Falls. Not a lot there to buy as well. A lot of people coming in, a lot of population growth. So I am going to be looking in probably those 5-6 states, Montana, South Dakota, Texas, Arizona, Florida, and Idaho, as a opportunity outside of our market. And if you have any interest outside of the market, or if you just want to stay within Grand Forks, please let me know. Just place a comment on this. I'd love to reach out or talk to you about it, and kind of what we're looking for in properties and what we need for cash flow projections. So anyway, guys, here we talked a little bit about taxes, cost segregation, how that help you in your investing, and then also ways that you can invest in our projects and through cash, 1031, and self-directed IRAs, and then also the new markets that I'm going to be looking at. Maybe if there's a new market that you think I should be looking at, please reach out or put a comments in the description below, and we'll definitely look at that and maybe reach out to you and just see what your perspective is on that. So again, thanks guys for tuning in for this week. Have a happy Thanksgiving. We won't be giving any updates next week, but we're going to hit this hard after Thanksgiving, and we're going to try to punch in some new deals. So stay tuned. Thanks guys.